All right, guys. Okay, if you can hear my voice, can you let me know? Okay, maybe you can type V in the chat if you can hear my voice clearly. All right, today is going to be a very, very special day. Amazing. Hi. Hello, Tabish. Hello, Adil as well. All right. Okay, I'm being distracted by the music. Let me switch off the music first. Hold on, okay, let me just make it softer. Okay, wow. Now StreamYard has a lot of function. Like basically they have like you can add in music, you can add in a lot of different kind of things as well. All right, so you can all right, okay. I can see Arun can hear me, Alvin can hear me as well. So in the meantime, let me just blast it to the Telegram, right? So that everybody can join us now inside the Facebook chat. All right, hold on right now. Okay, in the meantime, okay, who is getting ready to learn from Sean? All right, if you are ready to learn, can you type Sean in the chat? Because I believe all of you have been following Sean for a long time. You know that he's an amazing investor, right? And on top of that, he really started his journey as an investor from a very humble beginning. In fact, he used to be a civil servant, right? To eventually he grow his portfolio, he quit his job, and he continued to learn, continue to improve himself as an investor. And right now he has a 8-figure portfolio. It's like I think it's just truly amazing. All right. So I can see a lot of you are ready to learn from Sean how to add to the Telegram group. Okay, so yeah, you can join the Telegram channel below. I think there's some banners scrolling. Basically, that's my own Telegram channel as well. You can join as well. All right. So without further ado, let's welcome Sean to be here. Hello, Sean.
Hi, Chloe. Hi, everyone.
Thank you so
Right.
much, Sean, for coming in tonight to share with us a lot of insights and actually most importantly is your own investment journey as well. Yeah, I think Sean right now is like very busy, but thank you so much for taking out your time to be here to share with everybody your journey, right? And in the meantime, I believe right now because the stock market is also pretty uncertain, pretty volatile. I think later on as we continue to have this discussion, this so-called interview, I really treat it as an interview because for myself, I actually want to write a book, all right? And inside this book, I want to interview many amazing investors, and one of them is Sean. So today, I take this chance to interview Sean, his journey as well. At the same time, I also want him to share with you guys what is his current approach to this market volatility. So there's a lot of learning that you'll be taking away from. So also feel free to just type in your questions along the way as we continue this conversation. All right. So Sean, are you ready to share with us a lot of golden insights?
I don't know whether it's golden insights, but I mean, let's go ahead and have some fun.
All right. Thank you. All right. So I believe some of them may be the first time knowing you, or maybe they have not really know about your how you get started. Maybe you can share with us exactly when do you get started investing, and what makes you actually want to start.
Actually, frankly, like when I first started, right, I never really wanted to invest for a few reasons. Because when I was young, I always look at those TV show, and last time in my era, Hong Kong drama was very big. And those people who go into the stock market somehow always end up very bad. They lose money, they jump down from building, and there was the kind of impression I had. When I went to university to study under Nanyang Business School, I remember very clearly that my professor said that most people can never beat the market. So don't even try. He said that don't try, just stay out of the stock market. That stick with me, and I didn't dare to invest. And I felt that investing was risky, it was speculation. And what happened was when I was in the military, I wanted to actually make other income other than just my salary. I don't know whether you guys actually have that. So one of my colleagues, his name is called Sufyan. Back then, he told us that, hey, making money in the stock market is something that's doable. But, I was very skeptical. My mind was closed until he eventually just showed us his results. And it was like, I remember it's like maybe $250,000. I can't remember the exact amount, but it was big enough for me to be, wow, it's like you're younger than me, early 20s, and you have so much money. So I begin to like go down on my knees and say, Shifu, can you guide me? Of course, I mean, there's a joke. I already asked him, hey, can you guide me, please? And I remember he was saying, oh, you just need to read these papers, go and read this book. But he didn't stay in the military for long. After that, he went off to do his own things, probably like going to become a full-time investor or something like that. but it stuck in my brain that someone could actually do it. So that's how I wanted to invest, because someone that I personally know really showed me that it could be done. So, I mean, if you have someone who has been making money in the stock market and they actually show you, I guess that will inspire you. So I started investing in the stock market. Yep.
I see. So it's really because you see that other people around you, that it's possible, that really make you want to get started, right? And because you
That's
also
right.
want to create a different kind of lifestyle for yourself. Is that right? And that's why you want to have different source of income.
That's right. That's right. I remember very clearly that this thought of wanting to make extra income came in after I got married. Initially, I just wanted to like do well in my career, get promoted, and go for a very high ranking, become a high ranking officer. But when I got married, I remember very clearly on my way back from the honeymoon, I was looking at my wife. She was asleep beside me, and I realized that we were together every day during the honeymoon. I really love her presence and her company. But once we go back, I have to go to work, and I mean time at work is quite a lot, you see. So I realized that most of the time I will not be seeing her, and she'll be like sort of like left alone at home. I didn't want that. I want to actually spend time with my family, spend time with my wife, with my children, and that's where I started exploring around.
Wow, wow. I also want to ask the audience right now who are listening, who wants to spend more time with your family. If this is something that you want, can you type time in the chat? I can see a lot of people are here. Hello, Jonas. Hi, some people are saying hi to Sean as well. Hello, fella
Hi.
as well. All right. So I also want to ask, because I understand that when you first started, right? If I'm
Mhm.
not wrong, you make some money, but eventually you also lost quite a lot of money, which is $60,000. How did that actually even happen?
Okay, I remember very clearly that I eventually started by attending some short-term trading courses, and we used this thing called CFD. So back then, CFD was something that can let you leverage up to 7 times. And I mean, with the ignorance, came the confidence. Correct. I thought that wow, I should be very good at investing now. Now that I attended some courses, and I leveraged a lot. So what happened was, I initially make some money. I remember my first stock that I bought was in a Singapore market, and it was Bread Talk. So
Okay.
after I invested into Bread Talk, I made some money, and I get a confidence. And then after that, I began to actually tell my friends about it. So I said, "Hey guys, very easy to make money." And my friends pour money into my account for me to manage for them. It was back then. Okay? And that's
Mm,
where suddenly, you make some, you lose some, but I couldn't manage the whole entire amount well. And with the leverage, with inexperience, I lost a lot of money within 3 months. I lost 60,000,
mm,
and it was a very scary experience. So
mm.
that's how it went. I leverage. Yeah.
Wow. So it's, I think it's the learning point is actually leveraging can be very, very dangerous, especially you don't know what you are doing, right? I also want to ask who is in the audience who actually leveraged before and you also faces losses. Maybe you can type L in the chat. L stands for leverage. Yeah, wow, we have very international audience. We have Umar from Pakistani. Alright, we have I don't know how to name this person. I don't know how to pronounce it, but from Cambodia. Well, good to see every single one of you. I think the beauty of investing is it really doesn't
Mm.
matter where you are, right? As long as you have your internet connection, you have a brokerage platform, you can already get started investing. And Jovina had losses before by leveraging, all right, as well. So make sure be careful. But I'm just very curious, like you lost $60,000, and
Yeah.
that is not just your money; it's your friends' money together. How do you have the courage to even continue, like especially right now? I believe a lot of people are also facing losses. What's your advice for them?
Actually, on the high side, right? Maybe if I just lost my money, I could have given up. I'll say that, hey, the stock market is a scam. That's it. But because I lost my friend's money, I have to help them make it back. So I have no choice but to really figure a way out. And the amazing thing is, my friends, right? They are awesome friends, lah. They didn't really blame me. They just say, hey, don't worry, I'm sure you'll figure a way out. So they actually added that kind of confidence. I mean, they added a kind of pressure on me by telling me that they are confident in me and say, "Don't worry, we know that you didn't intentionally lose our money. We know that you'll figure a way out." So I felt a
Mm,
certain responsibility, and I really learned around. I attend even more courses. I attend
mm,
so many courses until I have no more money to attend courses. And because every course, no, seriously, because
Yeah.
every course, right, they mention like they have a particular special system to help you make the money. So I remember I learned about those 20 days breakout systems. I learned about 200 days MA system. There's so many systems, And until I couldn't attend courses anymore, I went to people who attend other courses that I haven't attended yet, and I asked them, hey, should we trade systems or not? So we form a group, we trade systems, and that's where things happen. During the trading of the systems, one particular guy joined us, and he taught me this system called Buffettology.
Mm.
He was at my house. I remember very clearly. So each of us, we were sharing our systems, how to do breakout, how to do technical analysis. By the way, I'm not against technical analysis. It's just that I'm pretty bad at it. So we all share. There's specific entry and exit rule. Then suddenly, when it's this guy's turn, he told us, okay, let me tell you about the Buffettology rule. Then he told us you have to look at earnings per share, you have to look at the financial statement, and he showed us how to actually do it and how to calculate the value of the price. After listening to him about like 15 minutes, I was sort of lost already because it's like so many things to look at, so boring, Because looking at chart is very visual.
Yeah.
But looking
Yeah.
at the financial statement of a company, wow, there's so many things to handle. I didn't know what he was talking about. But after going through one round, out of courtesy, I bought the stock that we analyzed together, which is Nike. so
Mm.
so I bought a stock there and I forgot about it, and I literally bought it on the spot, okay, because we were trading together at night. The rest of us, we do short-term trading, we do all sorts of trading. For him, he analyzed, we bought Nike, I left Nike there, didn't touch it anymore. I continued to trade for probably 1 year plus, and my trading didn't do well. You make money, it lost money. I tried Forex, I tried options. In the end, at the end of the year, I broke even. Broke even meaning to say it's not including the 60K. I already lost that 60K. So at the end of the year, I'm still negative 60K. I had 100K, it was down by 60K. So I'm left with 40K. But I actually look at the Nike. Remember we bought Nike?
Yeah.
It actually doubled in value. From $30, it went to $60 in 1 year. I mean, obviously, I'm not saying that every time we buy a stock that can happen. But that really caught my attention because I didn't care about it because there was no entry exit rule, you see. And so it was just buy and hold. And I just bought it out of courtesy to that guy, okay? And then I realized, hey, this particular stock, I didn't do anything, and 1 year later, it was 100%. The rest of my other trading techniques, I split them into different amount of money to test different systems. And none of the systems got me good returns after 1 year. Sometimes up, sometimes down. So I'm thinking if I put all my money into that Nike, I could have made a lot of money. So I went to look back for the guy and say, hey, that time, can you tell me again how to choose Nike? And he referred me to this book called The Buffettology by Mary Buffett. And you may think I'm quite a frog in the well, but I didn't know who was Warren Buffett back then, You'll be very... Maybe now you think, well, how can anybody not know Warren Buffett? But it was in 2005, 2006. There wasn't so much internet access. You got to read a lot to understand all this, you see. So I went to search about... I mean, there was internet already. But it wasn't something that we use every day. Then when I saw Warren Buffett, I feel so turned off because the first picture that they showed me is a very old guy. I say, wow, so old. I don't want to make money when I'm so old. I want to make money when I'm young. So I wasn't very interested, but it really made me, it really made me 100%. So I went to read out more about Warren Buffett, and I realized that this guy is no joke, When he was 30 years old, he was already a millionaire, starting from a capital of 9,000 plus. So he really started investing at 20 plus. Within a few years, he became a millionaire by compounding the money. So if a lot of you guys thought that Warren Buffett make money slow, it wasn't true. He made money actually very fast in the earlier stage of his life. Now he has slowed down because he has like 300 billion to manage. So I became very interested. I studied more, and I was a bit sick of losing money. So his rule number one was never lose money, which I became very excited. And I really studied a lot more. I even fly to the US to learn directly from the author, Mary Buffett. And I became in love with the idea of value investing or fundamental analysis. Because after you understand it, it is so much more logical than looking at price movement. Price movement, it is a lot about market psychology, which when you talk about psychology, it is very subjective. So that's where I how I got into it. Did I
It's
mention
also constantly changing, right? Like it's very hard to predict. Is that what you mean?
Yeah. When you're right, you're right. When you're wrong, you're wrong. And I realized that maybe it's because of the trauma I had when I lost a lot of money using technical analysis. Up to today, I just felt that I'm not very good in it. It may be a limiting belief, but I'm okay not to use charts. Using fundamental analysis, I can make my decisions.
I also want to ask the audience here, like, what kind of approach do you use for your own investment journey? Do you more like charting? If it's more for charting for you, can you type C? If it's more like fundamental analysis, can you type F in the chat? All right, let us know let us know as well. But in the meantime, I can also see that you are definitely somebody who are always testing and learning. Like you actually went for different courses. You like have different portion of money to test out different system, but that eventually make you really have this conviction that value investing really works, right? Buffett way of investing really works because you test out all different kind of methods.
Yes, I tested out, but again, I want to mention that I don't think that I am every method that I tested out, right? I would like to say that I may not have mastered them, because I do know of some people who are very good in technical analysis and they spend years mastering it. But for me, after 1 year of testing, I felt I didn't see the results, so I sort of stopped there. And I guess everybody can find different ways of making money. For me, I found a way: value investing.
I think like just like what Sean mentioned, there are different people who are using. Some of them are using fundamental. Like for example, Mr. Liu is using charting. I think it's like you need to find something that's truly suitable for you, right? There's no one size fit all kind of investing method, but is it suitable for you? Can you see consistency from this? And I believe for Sean, he see the consistency in just buying and holding great businesses, and his portfolio start to grow from there, right?
That's
So
right.
also very curious for yourself, right? Like when you are what makes you focus so much on education? Because like you actually invested a lot of money, right? Attending different courses as well. To eventually fly to US to learn from Mary Buffett, that definitely also costs quite a lot of money. Like what makes you focus on education so much?
Because I realized I couldn't figure it out myself. So I realized that when I don't know how to do something and I try to do it, I can actually spend a lot of time to really figure it out. Okay, so what you have to spend a lot of time, you have to spend a lot of money, which I really lost a lot of money. I don't want to actually waste any more time. And I realized that the stock market has already obviously told me that I'm not good in investing based on what I am at that point in time. I really lost money. It's a very strong data point and feedback to me. So I better go and learn from someone who has done it before. It's basically getting a shortcut. They compress years of experience for me and install it into me, giving me a higher chance of success. Yep. That's what I got.
I see. And for yourself, why am I listening to my own echo? Okay, and now it's okay. For yourself, right? Do you think like this process of mindset shift, right, from initially wanting to time the market using charts and to eventually just don't really, can I say that right now you don't really care about the market? Like this mindset shift, how do you think that people can master it faster? Because I believe once the investor have the right form of mindset, the investing journey will become so much smoother. How long does it take you, and what do you do to master it better?
Hey, frankly, I can tell you is one of the most difficult part, because in the end, after I learned investing, I learned about like the stock market is like a crazy psychotic. It will go up, it will go down. On theory, it all sounds very nice, but when it really happens, the kind of emotion you get is I mean, for myself, it is very hard to manage. I have to constantly struggle. Even like when I say, okay, hold on to my stocks, it's going to be okay, right? On theory, on hindsight, it looks nice, but at that point in time, it was so difficult. So personally for me, right, one thing that really helped, let me just also pass you guys this link, is to read the letters of Warren Buffett. I'm going to just post it there, see whether you guys can read it. Okay. Yes. Okay.
That Berkshire, yeah.
The letters super amazing, because literally you're compressing all the experience and knowledge. And when you read it, especially go to those point in time, you read it, you read all the years where there's market crash, like 1991, the tech boom bubble, and if now you can read back at 2008, 2009, you see during all the crashes what did Warren Buffett say, how consistent he is, and it makes you feel that hey, this guy is also a human, and these are the top patterns. So that's where it helps me a lot.
So you use that to also reinforce your learning and strengthen your mindset. Is that right?
That was something that I did, and of course, I do have a mentor, Mary Buffett, and it helps a lot when you interact with her personally, and she can tell you, hey, it's okay. Sometimes you just need someone who looks confident and has been there, done that, and tell you, hey, it's okay. I've been through that as well. It's gonna be okay. Reading it is one thing. Reading it is just words, but we can see the mannerism. We can see her relaxed face. Hey, it's okay. You feel really better. Of course, after a while, when you go back to your room, you see the stock market, you see the portfolio, you don't feel it's okay again. So you need it's a constant struggle. It's frankly a constant struggle. And I don't think I gained that kind of confidence in a very short period in time. I just honestly share with you, I feel that in order to look at the market drop, look at my portfolio drop by 50, 80%, and don't feel a thing, it probably took me more than 10 years. Seriously, it took me more than 10 years. I felt scared along the way.
Wow. So it definitely takes a lot of patience as well to be a great investor. But of course, like during these 10 years, I believe you do a lot of things to hone up your mindset as well as your skill set. And that's why when that 10 years after passing through, you really have that kind of calm, right? So I think some people are also asking, right? Like during this major market correction, which is happening right now, right? Like where all the companies, highly valued suddenly crashed to all-time low. The person is asking, do you think that Warren Buffett way of investing still work?
Actually, you already answered the question yourself, right? Because the Warren Buffett way of investing, right, is to wait for all these highly valued company to crash. You know what I'm saying, right? If the highly valued company doesn't crash, they are always fairly valued. It is very hard to get value investing. Value investing is to buy something undervalued, and in order for them to be undervalued, they must be priced wrongly. They must be valued lower than what they are supposed to be. But of course, eventually, there are some companies that's so strong, you rarely can find opportunities that they are undervalued. You can buy them at a fair value and let them grow. Okay, so let me explain to you. The Warren Buffett way of investing, it is very intuitive. Okay, it makes a lot of sense. So it's to buy stocks that is undervalued. Okay, got it? There are two ways for the stock to be undervalued. It can be undervalued based on current situation. The stocks is worth here. Now the price is here. How do you assess the stock is worth here? Based on maybe certain earnings, based on certain cash, the stock is worth here, and then now it's here. Now, this is based on current undervalue. You can also assess the stocks based on future value. In the future, the stocks will be worth here, but right now it's here. So you can see that it is also considered buying a stock of value. But now, I mean, there are different ways to mention it. Growth investing, whatever terms you use, it doesn't matter to me, you see. Most important is you can see that a particular value will increase. It will increase either because it's undervalued now or because it's undervalued based on future possible value. So this is the way to assess it. So logically speaking, there's no way that Warren Buffett's investment doesn't work because you always want to buy something undervalued, correct? So maybe what people think that maybe the way of valuation may have changed along the years. Okay, so for example, last time they will say like buy below book value, buy below P ratio. This is the way of valuating. Okay, so if the valuation method doesn't work anymore, you got to change the valuation method. But the principles of buying undervalued, you cannot tell me it doesn't work. What it makes sense, correct? Okay, so I do hope that actually explains.
So since we are talking about the market crash, right, which is happening right now, what's your current approach? How do you cope with? Do you have any sense of emotion right now, seeing the portfolio dropping? If not, or if yes, how do you cope with it?
Okay, maybe I see whether I think I was expecting this question. So I was actually sharing this earlier. Let me see whether I got my tab. Hang on a minute.
Yeah. Oh, that chart, right?
Yeah, the chart. So I think some of you saw it, right? So let me show this. Okay, so this is a market cycle. And okay, the market cycle, this is not a 10 years market cycle. This is probably what happens during a market downturn. You all can see this, correct? Can see,
Yeah, maybe if you can like make it bigger, that would be better.
I wanted to zoom into certain portions.
Yeah, that would be good.
So let me explain to you guys. So the market, right? Last year, I really felt that we were very complacent. Everybody think that they are market genius. Market is going up. I mean, well, during a rally, you are able to catch the trend is good, but you also must know how to exit, which is not easy as well, correct? Then the market is coming down right now, and right now, everybody, I don't know where are you right now. Are you anxiety? Are you in panic? I mean, all these are market cycles. Now let's this is theory, correct? Let's bring it to a actual market situation. Let me just screenshot the S&P 500. A 1 year data. You all can see this, right? Okay. Zoom it out. Okay, zoom it out. This is S&P 500. Do you all see where the, oh, wait, hang on. You all can see, correct?
Some resemblance, yes.
It is always like that, you see. After you go through 2008, after you go through even 2012, there's so many data points to show you that the market always respond like this. Let me see whether I can. How do I make it transparent? Oh, okay. Hang on. If I make it a little bit transparent, okay, you can see, correct? This is exactly. I mean, it won't be right. Can you see that?
How many years of data for SPY?
Just 1 year only.
Oh, 1 year. Okay.
So you must understand that. Okay, if we go to SPY, let me unshare this. And then we go to the SPY actual chart.
All right. In the meantime, guys, so far, have you guys been learning something? If you have been learning, can you type L in the chat? All right. So if you find that whatever things that Sean is sharing is very useful, helps to really just make people be less scared, more peaceful, at the same time really having a better mindset when it comes to investing, feel free to share out these live to other people, so that you never know, right? When these appear on your feed, when your friends actually start learning as well, you may just really help that person to become a better investor. I think that really helped, right? Just share it out. All right. Thank you, everybody. Now, Sean, please continue.
Okay, so you can see S&P 500, right? When we talk about the market cycle, just now we show what market euphoria, anxiety, and all that, right? It always happens. You see, it will go up, come down. Now, when you look at the whole entire big picture, okay, I want to ask you guys a very simple question. Okay, this is what the S&P 500 looks like since 2016 until today. Probably that's what, I don't know, 6, 7, 8 years. Okay, so you can see this is the stock market movement. Now the question is this. The question is right now, the market is here, right? Do you think it will go all the way down to, I don't know, 2016 time? Okay, or if let's say I'm going to pull it, you see, if I pull the stock market a lot smaller in the bigger scheme of things, this is for the past, is it 10 years? Okay, almost near 10 years. In the bigger scheme of things, okay, where do you think the market is going? So the next 5, 6, 7, 8, 9 years, can you tell me, will it go up, down, or sideways? If you look at it in this perspective. Okay.
Like a long term.
Yeah, in case you don't know, right? Let's zoom in here. Okay, because every few years there will always be a downturn. So let's zoom into right here. This was in this one. Okay. Let's go back to 2000, even 2012, right? 2012, it looks like this. It goes down a lot. So whenever it goes down a lot, it always looks like it's going to go down some more, right? But eventually, let's zoom out. It always goes up. Okay, it always goes up. And let's say look at here, 2000, even 2015. Okay, this dip is actually quite a lot. If in case you all didn't know, it goes down, come back up, then goes down again. Wow, it's so scary. But eventually, it always goes back up. Now, the reason why it always goes back up, of course, we don't just look at the past data. We must understand the logical fundamentals of why is this supporting the price to go up. Very simply, now this is S&P 500. Wait, hang on. Let me just explain. When they talk about the stock market going up or down, it's talking about the S&P 500. Let me just go to the components of S&P 500. The component data is not here, but let me go in S&P 500 component, S&P.
So the top 500 companies in the US, including great businesses like Apple, Microsoft, and all this.
Yeah, Apple, Microsoft, Amazon, all this. Are you telling me that for the next 3 to 5 to 6 years, Apple is going to make lesser money and the valuation is going to go down? I think it's very unlikely. Look at all this, okay? Even Facebook, even like Nvidia, JP Morgan. Now, some of them may not do well, but these 500 companies, they will always put the best inside. And I mean, just take the top few. Do you think Microsoft is going to like sort of like disappear or go down for the next 5 years? Or are they going to actually charge you higher for the next Windows? And are they going to charge you higher for the Xbox and even LinkedIn apps? I mean, all these will actually go up, right? So you think about it. Every single day, you must understand something. Every single day, actually, I like something that my friend mentioned. You must understand that every one of us, every human being, we are thinking of ways to make our life better. Don't you agree? I mean, are you trying to make your life better, Chloe? Or are you trying to make your life worse? so,
Always good, always better.
so it's like every day, 7 over billion people are thinking how to make more money, how to make their life better, how to invent better products, and therefore the economy overall will just become richer. This is normal human like spirit, right? So don't you all agree that based on all this, based on innovation, there's no way they're going to go back to iPhone 4 or iPhone 3, correct? They're going to have iPhone, I don't know, 20, and then when iPhone 20 is out, there will be more technology and the whole entire world will go out. So when you remember that perspective, it is a lot easier to really invest and hold. Short-term wise, your wealth goes down. It is part and parcel of the game. Okay, so this one I wanted to share.
But talking about this, right? Like I totally understand, and I'm personally also very bullish about the stock market, right? But will you ever think about what if things go wrong? Like let's say, for example, like really a catastrophic happen, maybe the meteorite strike the Earth and stuff, and how do you and if that's the case, maybe whatever things that we are assuming right now may not happen, right? How do you protect? Do you think that it's possible? Like if you think it's possible, what ways are you doing so that you can hedge against your portfolio or protect against your own ignorance?
Well, you see, okay, so let's talk about the possibility of things going wrong. Is it 100% confirmed, 100% that stock market will definitely go up in the long run? Well, nothing is definitely confirmed, correct? But again, so I put it into the extreme level. So do you all dare to go out to the streets right now? Is it confirmed that a car won't suddenly deviate from the road and then just knock into you? There's a possibility. There have been news that show that the cars just drive out the road and kill somebody, right? But you cannot. Okay, I'm not asking you to anyhow risk your life, but the chance of that happening is not that high, correct? You cannot let that paralyze you. So you need to take action. So what do you do when you go out on the roads? You don't walk on the roads when there are many cars on the highway, correct? You make sure you obey to the rules. You make sure that you keep yourself safe. So in terms of the stock market, number one, you cannot expect the stock market to totally crash and lose everything, and therefore you get paralyzed and not invest. You got to invest. So how do you invest? You invest within certain rules and within certain logical boundaries. So one of the most important thing that you have to do, right, is to create a portfolio. Should you buy call? Should you sell put? All these are doable if you are willing to diversify and put into a portfolio. A lot of people tell me about diversification, no need portfolio, concentration. You can do that, but you must bear the risk. You got to bear the risk. For me, I'm not willing to bear the risk. I'm going to diversify, and each one that I invest in, I also have a possible, I would say, expectation that who knows something may go wrong, and I'll lose that amount for every single stock or every single other investments that you invest. You got to have a portfolio. At least have 15 to 20 stocks. If you think that is too little, I don't know, man. You for those who buy like 5, 6 stocks, look at your portfolio now and tell me how you feel. Okay, so it is ready to protect yourself.
So to yourself, like an ideal size of diversification, it will be like 15 to 20 stocks. A balancing of can be tech companies, can be very stable consumer staples companies, so that your portfolio it's all weather. Is that what you mean?
I don't really do so much into sector management. For Bruce Greenwald, who is from Columbia University, I think he mentioned 15 sectors or 15 stocks, 7 industry. Okay, for me, I don't really do that. If you want to put all 15 stocks or all 20 stocks into one particular industry, which you are very confident will continue and you are very clear of the industry, go ahead. I mean, you can actually buy an ETF of a particular industry. So there's actually a lot of examples of people who concentrate into particular industry, knowing that the industry won't go down. It's just that if you want to bet onto particular individual stocks and put everything in there, I think it's extremely risky. So there's this guy called Shelby Davis. He only invests into insurance stocks. You can actually search on him, Shelby Davis. And what he did was this. He concentrated all his portfolio into insurance stocks, but he diversified into different insurance company. And eventually, if I remember correctly, he turned $50,000 into 900 million. Into 900 million. And during the tech boom, during all those times, like when US, the stock market went so high, even insurance company stock price went crazy high, P ratio of 80, 90. He couldn't find any stocks to invest. And he also don't understand technology stocks. He don't understand a lot of things. So what he did was he went to look for insurance stocks in other countries, Japan, India, and he bought the insurance stocks there because their P ratio, their valuation is low. And eventually that's how he turned 50,000 into 900 million. So it's doable. But I haven't seen investors who really concentrate that much and then make a lot of money and became like on top of the list. So Monish Prabhai, who was self-claimed disciple of Warren Buffett, because he actually literally copy whatever Warren Buffett buy. There was one point in time, he actually invested into 10 stocks, equal 10%, 10%, 10%, 10%. And one of the stocks totally got wiped out, closed down, and his portfolio really dropped 10% and took him a lot of time to recover. So he realized 10 stocks is too little. That's why eventually, after calculating it and stuff like that, 15 to 20 stocks is really much more safer. Even the best investor in the world, they acknowledge that.
I see. And it's also about investing within your competence, right? Not just for the sake of diversifying, but really understanding the industry, that particular company, and that's why you will choose to diversify.
Correct. You need to understand what you're investing in.
I see. So for yourself, right? Like what habits do you cultivate? Or what kind of daily routines that you do every single day that make you, that in your opinion, that has contributed to your success in your investment journey?
Wow. I mean, the daily habits. I mean, okay, most of the very strong investors, as far as I know, these are not my personal like self-taught habits, but basically read a lot. And you must, I need to explain this. Like there was Warren Buffett says that he read about 500 pages a day. 500 pages is like, let me see, is there a book to actually illustrate 500 pages? It's literally like a book.
Like one book is about 200, 300 pages, right? This is like double the size.
Maybe you read 2 books a day, you see. Or he read like annual reports. Now, when you read, right, I also realized that, okay, a lot of people read, but they read on surface. Meaning to say, right, they read, and then, for example, you ask them, hey, what book are you reading? Then they can tell you, oh, this book, very interesting, and that's it. But I can tell you a lot of the very strong investors, they read at the application level because it's synthesized. So there are 3 levels of learning and reading. The first level is just to remember. Oh, I remember what I read. If you cannot even remember what you read, then maybe you can watch YouTube. Maybe some people learn better by watching. So you remember. Second portion is you can summarize. So, okay, I read this and let me summarize for you into a framework. Third one is application. So you can remember. Actually, I realized a lot of the very smart people, right, when they are reading or learning, they are already thinking, how can I apply this particular point? Is it relevant to my current portfolio? Can I actually review this? They are already thinking how to use it, and then they eventually use it. So I personally enjoy reading and learning, and I push myself to always think, how can I apply this? I mean, you don't have to apply everything, of course, but always think of how you can apply this. Eventually, you can choose not to apply it, but your brain actually thinks that way. Now, it helps you a lot in decision making in the stock market, because when you absorb the reading of other people, a book that is written by someone who has years of experience is basically, again, giving you the gift of years and decades of really like their knowledge. It is so precious. So I remember reading this particular book that is recommended by Pete Tan. It is actually by Annie Duke. Okay, the particular, okay, she's the world champion in poker, and she's a world champion in poker, and it's extremely relevant to investing. It's very interesting. So in this particular book, right, she mentioned this thing that I thought was very good. She says that quality outcome, quality decisions don't always lead to quality outcome. Okay. So example, you analyze a stock, you do your value investing, you do your valuation, you study everything, and then eventually you position size, you portfolio, you buy that stock. That stock tanks,
Sure.
and then you lost a lot of money. So
Yeah.
you did a good decision and your process is good. That doesn't guarantee your outcome. But a lot of people don't understand the difference between outcome versus decision. So they see that, oh, this is a lousy outcome. I lost money. Meaning to say that my process must be wrong. That may not be the case. You review into it and then you say, no, actually my process is right. So what you need to do as strong investors, as poker players, so what does it mean? For her, when she plays poker, she calculates odds. She say, what should I do now? Should I actually, okay, I don't really play poker, so I don't understand the terminologies. Should I fold my card? Should I put in more money and things like that, correct? Every time she make a decision is based on statistics and calculation. Like the probability of winning. Yes, the probability of winning is high. Therefore, I try to bet more. And when she does the betting, sometimes she lose. And for normal people, after they lose, they will feel very emotional. Oh, shucks, I must have done a bad thing, correct? For her, she doesn't. She says that, no, I've already done the best thing based on all my calculations. Therefore, next round, I'm going to do it again. I'm going to go through my process again. So you have the discipline of always making high quality decisions. Okay. So I'm a bit deviating here. So as investors, right, when you have a checklist of investment, you keep doing it over and over again, regardless of one or two outcome. You cannot let one outcome sway you and say, oh, it doesn't work anymore. Or maybe you are lucky. You listen to someone who actually say, oh, you should buy this stock. And you bought the stock. You bought the stock without studying, and the stock price went up, and you make a lot of money. Then you say, wow, I should have listened to the guy more. And then suddenly, whatever analysis, forget it, throw it out of the window. Now, the quality of the decision was a lousy one. You cannot just listen to someone and buy stocks. But the outcome was a good one. Can you see? So unfortunately, some people, when they do that, they taste good outcome and they start to become very lousy investors. Train yourself to be a strong and good investor, and understand that no matter how strong and good you are, there will be instances the outcome will not be good, but you continuously be consistent. Okay, sorry, am I deviating to that?
Well,
But
I think so. I think this is so much wisdom. And this kind of resonate to one of the book. I forgot who's the. If I'm not wrong, it's the most important thing. By
Howard Marks.
Howard Marks. And he also talked about the same thing, right? It's like you cannot judge your decision based on the outcome, right? Because sometimes it could be a lousy decision, but then you end up making a lot of money, but doesn't mean that person is a great investor, and vice versa. So I think it's really, really a very strong I learned a lot from this. Yeah. Well, I think some people are also asking like when you accelerate your portfolio return, do you just buy stocks or do you actually do options as well? Some of them are even talking about what structural warrant. Do you use derivatives?
I do. So I do use options, and I use them in a way to leverage myself. Okay, so this is the portion that, hey, by the way, please don't just listen to this segment and start to use options without having proper training. Maybe actually let me just share with you guys one of the YouTube video that I'm very proud of, which is I call it the most powerful option strategy.
Yes, that's right.
I really like that one. Okay.
Yeah,
Okay.
I love that too.
So this is in case y'all didn't know, is basically taking something that I know can win, and okay, so I the whole idea is I buy a very long-term call option on S&P 500. I mean, you can do that with other stocks, but S&P 500 is pretty much proven. If you hold S&P 500 for a period of 3, 5, 10 years, right? I mean, by the time you hold it 10 years, there's no 10-year period of holding S&P 500 that you actually lose money. If you know you cannot lose money and you have a super high chance of making money, to me, I think it is wise to actually go in that direction, and then you can leverage. Okay, for me, when I leverage, I use options to leverage in a very, in my opinion, is a safe way. So this video explains everything. you can turn 20,000 into 500,000 in probably less than 10 years. And if you like even put in even more money along the way, that's where you can make tens of millions. And another of my friends, he did it 50,000 turned into 8 million in I think 15 years or something like that. So you can go and do back testing. It is something that is very, very doable.
Yeah, it's called Parakupa strategy. Super powerful.
I call it Parakupa.
But
yeah,
you're saying?
Just to explain why is it called Parakupa, in case you all didn't know. So Parakupa is actually a character in Super Mario. You all know the tortoise? That Super Mario had to play the tortoise with wings. So the story behind it is there are some investment that is like tortoise, slow and steady. So S&P 500 is slow and steady. I mean, they're not really slow, correct? They make about maybe 8 to 11%, depending on when you buy it.
Yeah.
So they are very steady. If you add wings to them, they are steady and they can fly. So why not do that rather than try to speculate some things that you may not know fully. Yep.
Oh yeah, Sean, come to just go back to your previous poker sharing. What book is that?
Let me just check. Okay, it's by Annie Duke book.
Okay, I think it's definitely one of the books I want to read because recently I think I also started cultivate this habit of reading, and I just like what Sean said, there's so many wisdom and insights that you can get from many great investors. You don't have to just read about investing. I think it's about also learning from different fields as well. So it's called what? How I Raise and Fold, is it?
I think it's on Thinking in Bets, if I'm not wrong. This is the book, yeah.
But okay, wow, cool. Yeah. I'm going to read that.
Okay, for those who don't like reading, you like to listen. Actually, YouTube, there's a lot of she has all the TED Talks, she has all the interviews, she has all the podcasts, and it's very, very interesting.
Cool. So like right now, if you are talking about using the Parakupa strategy, just to add on a little bit, I believe some people are also wondering, so would this be a good time to add into it? What's your take on that?
I think it's okay. I really think it's okay. So okay. I mean, if you want to be a little bit more sure, right? We just now show you the psychology of market cycles, correct? So you can wait a little while more because very likely, from observation, there's probably going to be a recession. Because there's a whole new topic. So if you really want to wait a little longer, I think it's okay. Sometimes you can wait for confirmation, meaning you say you wait for the market to start to move upwards again, then you go for it. You don't really have to rush into it, you see. Okay, because you're giving it time. So you can stand by and then wait for it. I personally feel maybe one practical way. You take your money, you split into 2 or 3 segments. So example, you got 5,000 to invest into the Parakupa strategy, the S&P 500. Divide into 3 segments, and you can invest a bit right now, buy a long-term call based on however much you can afford. Then you wait. Okay. Because the worst thing is this. The worst thing is after, if you invest everything now and it goes down, you may feel very, I would say,
no more bullet.
More bullet. And sometimes the worst thing that can happen to an investor is you feel helpless and you feel that there's nothing you can do. So at least if you split into phases and there's still something you can do, you feel a little bit more in control. A lot of investors don't like to feel out of control. That's the thing. So split into phases. Now, then why don't we just wait for everything to recover before we invest, correct? Because there also may be a tendency where you take all the money and you keep waiting and you see, it seems to be going up, but maybe you'll drop down, and you really drop down and then you go up. So you keep waiting until you miss a chance and it goes all the way up.
Yeah.
So if you go into phases and start investing a bit here and there, I think it is probably the best thing you can do right now.
Yeah, it's just like either it's averaging down or averaging up, but then you have to start doing, right? So that when opportunities come, at least you did not miss out, or when it drop further, you have additional bullets to fire, right? Okay.
Right, that's right.
So, like for yourself, right? Like when it comes to, since continue this topic of crisis, can you share with us like what happened to, like, generally when you tie through this crisis, right? Which you have tied through numerous crises before. What happened to your portfolio? Like what kind of transformation do you see from this?
There is the time, right? Every time you are willing to go through a crisis, invest and really continue to believe that yes, the market will go up eventually, and eventually it does, right? Your portfolio will suddenly grow at a super speed. It will really grow very fast, because after a market like hit the bottom and when it recovers, it recovered very fast and very, very long. So for those who went through 2008, you know that once it hits 2009 bottom up, then from 2009 all the way to even 2012, right? No, even longer than that. When was the last one? 2000 and is a very long run. So while your portfolio doubles almost every 2 to 3 years, if you are using options, it can double almost every 1.5 years. It's very, very fast. Imagine your money double at 1.5 years, So let's say you put 50,000 in, 1.5 years later is 100,000, then it becomes 200,000, then 400,000, then 800,000, then 1.6 million. And you just need probably like 5 times, right? 5 times 1.5. So you can see that, and if you add even more money in, right, I can tell you that's where millionaires are made. During the crisis, they make decisions, and along the way, they add in some more.
Wow. So that's why like during like a crisis that comes so rarely, actually it has been like 2 years, right, since the market keep on going up, and right now this is such a great opportunity to really start investing. Do you think so?
Yeah, I think so. I think it's time to actually go in phases, as I mentioned. Start to invest a bit first. Because if you keep waiting, there may be a chance that you become sort of paralyzed. You're not used to your muscles, your investing muscles is gone, you see. So when you really need to invest, you can't invest because you forgot how to. When I say forgot, it's a real thing. For those who try not investing for a while, you go back and lock in and you try to click. I can tell you the whole entire feeling is so heavy. And when it's very heavy, you can't invest. For those who have been investing, you know what I'm talking about. It's a very real thing. How you feel actually affects how you act. We shouldn't let that affect us, but seriously, it affects us.
If we go back to, like, for example, 2008 financial crisis, I remember there was a time that you shared with me one experience that you believe in this stock, but then because other people keep on saying that no, it's going to crash, and eventually you actually sold it off.
Yes.
How was it like actually?
Wow, that stock is AIG. I remember very clearly up to today because it actually dropped from $200 to $5. It was a very scary drop, right? But based on the
200 to 5.
analysis,
Oh my
yeah,
god.
205 is crazy. It's crazy, totally crazy. And the thing is this: when you look at $5, it is way below their book value. They have a lot of cash, so even if they go bankrupt or things like that, right? There's enough cash to tie them through, or even the amount of cash you get back, you'll make money. However, after I buy the stock, one of my friends keep telling me that another guru, tell him that this stock is over. They are going to actually wipe out their cash. Everything is gone. I got very scared. So when the price dropped from $5 to $3, my friends keep asking me, "Hey, I told you already, correct? Did you do anything?" And I didn't do anything, correct? So by the time it dropped to half, 50%, right, 250, I couldn't take it. The pressure was so high. I keep thinking of what my friends say. Whatever analysis that I did about the cash, about the book value, went totally out. All my logical explanation went out, and all I can hear is what my friends say. And I imagine all the bad things. When the stocks go to zero, my portfolio is gone, and people will laugh at me, and I feel like a loser. I imagine all the terrible things, and eventually I sold it off. Then within, I think, 2 months, from 250, it went up to $40. So if I have held onto it, right, $5 goes to 40 is almost nearly 10 times out, eight times up,
Yeah.
So a very bad mistake. I mean, but frankly speaking, back then I also invested a lot in that stock. If I have position size and portfolio,
Right.
yeah, it was almost like 30 to 40%. I think 40% of my portfolio. So the pressure was very high. If you only invest 5%, 10% of a portfolio, I think, well, you can just let it go. Yeah.
I think once again it goes back to portfolio sizing and diversifications as well,
Very
so that
important.
you do not make yourself going through unnecessary stress that may just cloud your decisions, right?
That's right.
I see. But then during that time, I'm also very curious. So since 30 to 40% of your portfolio is already over there, what
Yeah.
else did you do that like did your portfolio actually accelerate a lot due to the 2008 crisis back then?
Okay, yeah. I wouldn't say accelerate a lot. That time I also, that particular stock, AIG, I share with you something really, really very openly. Most of the stocks that I buy, right, I tend to copy someone else whom is a very good investor who actually bought it. So just to be very open, AIG was bought by this guy called Adam Khoo before, and AIG made him a lot of money. That's why I had the faith in AIG, and But okay, after that, a lot of people say a lot of things, and I got shaken. So other stocks that I bought was like Wells Fargo. I also bought Bank of America, a lot of financial stocks, because back then it was a financial crisis,
Yeah,
correct?
yeah, financial crisis.
So if you know Bank of America, you know Bank of New York Mellon, Wells Fargo. Sounds like I'm a genius to pick all these stocks that went up a lot, correct? It was all Warren Buffett stock. So I'm not ashamed to share. I'm not ashamed to share that a lot of the stocks that make me a lot of money were stocks that Warren Buffett already picked. I'm not ashamed. The good news is when Wells Fargo, I remember I bought it at $30. I actually sold put. The premium was very high, very high. So I think when I sell a put, the premium can go up to even 5 to 6%. Wow, good money. So
Yeah.
so per month. Last time during that time there wasn't weekly options.
Yeah.
So when the price went down from $30, went down to $11, right? I almost went crazy because again I also put a lot of money inside Wells Fargo. The good news is this. The good news is Warren Buffett came out and said that, wow, I regret. Then I said, wow, what did he regret about Wells Fargo? He said, I regret not having money to buy even more. What that when you hear Warren Buffett say these kind of things, you gain a lot more confidence. Then you, it's going to be okay. And eventually, within 2 months, from $11, it bounced back up to about 28, where I can sell a 30 call, and then the stock bounced back, and it hovered around 30 plus for almost 1.5 years. I keep selling calls, selling put, make a lot of good premium. But eventually, I think by 2010, the stock starts to shoot up a lot, and then it never came back down. Like, oh, I should have held on to the stocks. Because I calculated, right? Seriously, I calculated. If I just buy the stock and hold on to it, I would have made more than all the premium that I collected. Because that time the transaction fee was also very high. Now it's almost free now.
Now it's also cheap. Yeah.
But if I bought a call of Wells Fargo and just hold it, right, I would have made a lot more money than just selling options and getting premium. So on the high side, yeah.
So basically, less is more lah. Sometimes actually doing less actually can make you more.
In fact, for investing, at least that's what Warren Buffett believes, that passive investing will give you a lot more results than active investing. This is what he truly believes. So I think some of you may know he even make a bet with those hedge fund managers. He said that if any of you guys can beat S&P 500, I'll give you $1 million over 10 years. And eventually, those who take on the bet, none of them were even close to S&P 500's return. They were not even halfway of S&P 500. S&P 500, you just buy, just hold it there for 10 years and
Yeah. Okay, I see. So I think it's super interesting. How many of you feel that like whatever insights that Sean is sharing is very interesting, right? If you think it's interesting, right, can you type I in the chat, all right? So like I'm just very curious, right? For example, how do you have that kind of patience, because sometimes, like for example, your Wells Fargo, right, like kind of like ding dong for like 1.5 years, it didn't really move much. What makes you continue to have this strength to say, hey, it's okay, I'm just going to hold on to it?
Honestly, every day was a nightmare. Every day was so scary. No, I mean, for those who invested, I still can remember back then I was using 2008 whatever smartphone that we have. I don't think we have iPhone. I don't think it's iPhone back then. It's probably some Nokia something. And they will just pop out, wow, the stock market went up by how much? And I felt happy. Wow, yes, I'm making money. Then it went down the next day, and I felt like so depressing. Every day was a struggle. I can tell every single day it affected me. I'm not kidding you. So whatever things I learned from Mary Buffett, whatever books I read, it helps me feel good temporary. Okay, but I don't know. Frankly, I don't know a shortcut of how to get rid of those feelings. But I'm glad I went through it. Okay, Now it's like, wow, how many years ago? Then on hindsight, it sounds very easy. But that time, every day was a struggle. I forced myself not to look at the stock market. But in the end, you guess what? Even when I don't look at the stock market, the whole day I'm thinking, hey, did it go up or down today? And I still want to find something to find out. So frankly speaking, I don't have an easy way of going through that. But I guess nowadays, okay, so I mean, some of the people may know that we have like a coaching program, mentorship program. And some people will feel like, why do you need to like charge for a coaching program? Personally, back then, like I mentioned, the thing that really made me stabilize for the longest and made me feel sane, made me feel like not go crazy, is when my mentor tell me, hey, it's really okay. And that effect of it's okay probably lasts me 1 or 2 days. Then the third day I'll feel crazy again. So I got no shortcut. You ask me how can I be patient and all that? I don't have a magic answer to that. I really don't have. It's a struggle every single day. Until eventually, when you see your portfolio go up, go through a few more crises, and every time keep reading, keep learning, keep reflecting. That's where after a while you learn to become sort of like, I've went through this already. And I remember the last time I go crazy every day and things still pan out the way it goes. Doesn't mean that I worry a lot more it gets better. It don't. I can tell you very frankly, really, like when some stocks go down, right, I become super religious. I really pray very hard. I'm not kidding. I really pray, God, please help me. I promise. I promise God a lot of nonsense. So I can tell you, it's the real thing. It's a struggle. So some of you know what I'm talking about.
but I think like having, like what you said, like having that environment at least prevent you from going crazy, and at least point you back, even though you humans tend to deviate a little bit, but then if you constantly get pointed back, eventually you will be more and more on the right track. Do you agree?
Yes. Each time you go through, you just come out stronger, but not totally perfect, you see. So every time, but really, I think almost after 10 years, I remember by 2012, because there was another dip, and I look at it drop, and buy more. And when I realized, I really don't feel anything anymore. Then I check back, it is almost 10 years, almost 10 years.
Wow.
To get to a stage where you don't feel anything anymore, you diversify, and you know that whatever, the stock market eventually will go up. It's just a matter of time. Don't worry too much. Go and play badminton and do other things.
Our company always do a lot of different sports. I think sports also help, right? Just help you relax. We have like badminton day, we have kinesthetic days, and it's very fun. So how do you think investing has changed your life? Like what kind of freedom does it give you right now, or do you think that your lifestyle have changed a lot since you become a successful investor?
Okay, I don't really know whether I'm a totally successful investor yet, frankly speaking. I think there's a lot more to learn. And I think when you think you're successful, sometimes there's the time you become complacent, and that's where things will start to go haywire. I always feel that I'm a learning investor. I'm always exploring. And every next stock I buy, I'm confident, yet at the same time not confident. So I always think that I may be wrong. Okay. But so that's why I don't dare to like totally throw everything in, or like be so arrogant to say this must be the right one. Well, I think investing, before we talk about the lifestyle, I think it really developed the character a lot. It makes you see a lot about yourself, how you react when money is on the line, and when you see situations like go not according to the way you plan, what kind of things goes through your mind. And after a while, you begin to realize that you can't control a lot of things. What you can control is how you respond and how you actually like react to certain situations, right? So I felt that it's a very strong personal development. It gives me a lot of freedom from fear and uncertainty. I think that's more important than money first, because once you have freedom from needing certainty, right, a lot of things you can do. Say, well, it's not confirmed, but test and then see what happens. And the worst case should not be able to kill you, and there's enough to test. So of course, when you do it that way, money eventually comes. And I want to share with you something. A lot of people have the misconception that full-time investors, we can make monthly income. This is true. We actually sell puts and things like that. We make monthly income. But the real seasoned investors, we don't look at it at a monthly basis. We look at it as an annual basis. And you can actually draw down some from the annual. And a lot of, this one, seriously, you all can go and check. A lot of very seasoned and full-time investors, right, continue to make money from other places. When you learn how to make money from other places, like some of them, they do like, I don't know, some sideline business. Some of them continue to work in certain places. They do that, right? Because first of all, I don't know, when you have a lot of money and you have nothing to do, it's not the healthiest. Frankly, it's not the healthiest. It makes your brain goes a little bit more degraded. So it becomes slower and slower. So continue to keep yourself active in certain things. But the unfortunate thing is you can't be active in investing if you want to be successful. So if you cannot be active in investing and you need your brain to continue to work, right, you must go and find something else. You must find a hobby, find something else to work. And when you find something else to work that can actually give you income, that allows you to make better investment decisions. But if all your whole entire livelihood depends on your next investment decision, it's going to be very stressed, and the chance of you making mistakes is very high. So it is a very mental and inner game when you talk about investing. So overall, investing the income, I mean, it's good to have money, right? At least one problem is solved. I mean, it gives me, it doesn't, okay, frankly speaking, it doesn't make your life a lot better in many sense, but at least the money portion, frankly, once you know how to make money, right, you don't have that worry about money. Money
Yeah.
becomes more like a game, more like a challenge. Well, I guess for people who are worrying about money right now, please pardon me. I don't mean to be like condescending or saying like, oh, money is not important. It is important, but once you have the ability to know that you can make money from like the stock market, from investing, given time, given the correct conditions, that's where one big portion of the issues of your life is settled. Then you can focus on other issues that probably needs more attention and is more important. Yep.
Yeah, I totally agree. It kind of remind me of this quote about like actually wealth creation is the ability to create wealth.
Yeah.
It's not about how much wealth you have, but your ability. Because if you have that ability, even though you lose everything today, you know that you'll be able to, of course, I don't wish anybody to lose everything, but you know that you have this ability to make that again. I think that is the ultimate confidence that anybody can have, and you do not have to worry, right? Because you know you have that ability, right? And I think like what Sean said about the character development, it's very true. Like in order to become a great investor, you need to develop traits, that character, to become that great investor, rather
Yes.
than So what kind of attributes do you think a great investor should have, or what kind of character do you think that person should develop?
I think first of all, right, the first one, right, is really humility. Okay, it is actually a spectrum, both spectrum. Humility meaning to say that anytime you may be wrong, so you must have a sense of healthy fear for the market. You know what I'm saying? You cannot be too arrogant. Okay, I see a lot of people's downfall is when they are too arrogant. They think that they are sure to be right. Okay, so you must have a healthy sense of the fear of the market. At the same time, you must have the confidence. So you know, it's two spectrum, but it actually makes sense. So if you look at like anyone, Warren Buffett or anyone, right, we can actually see that they're very humble. You know, even up to today, they will say that, oh, I'm wrong, or they admit to their mistakes. They know that they're not perfect. And like Warren Buffett said, I'm an idiot for not buying Amazon and things like that, you see. So I think humility to say that you may be wrong, and that's why you continuously need to learn is very important. Okay. At the same time, you cannot be so fearful until you cannot do anything. So you must ultimately still have confidence in your analysis and say, okay, I may be wrong. So, but I'm still confident enough to put maybe 5%, 10% into this particular investment. So this is one attribute. Of course, other attributes like we talk about patience, we talk about discipline. Wow, it is not easy. It's really not easy. Again, it is a continuous journey to build yourself. And the thing is this, you can lose it one. You can lose it. You can lose your patience. You can. We are all humans. I've seen very strong investors making money well in the stock market. You know, they make like maybe 20%, 15%, which is very, by the way, I don't know about the audience here, but 15 to 20% consistently is actually very strong.
It's very good. It's very strong. Yeah.
And as your portfolio gets bigger, it gets harder to actually make the kind of results. Okay, because like now you want to go and buy 1,000 contract, of course you may not, the orders may not be filled. So it gets harder and harder as the games becomes bigger and bigger. So I've seen investors who make very, very good money in the stock market, and then they can fall for stupid scams on it. I can tell you, it's so ridiculous. It's like I thought that they are very smart in their money. I mean, even for myself, but sometimes when something shiny object comes out, right, and people start to say a lot of things, your confidence of yourself begin to shaken also. Like, wow, maybe I should jump into this as well. The only person whom I feel that is really super steady, unshaken, is Warren Buffett. Really, I'm not kidding, man. You go and look at him. There are some things he said, really, I don't understand Bitcoin. Forget it. Don't invest. And he really can don't invest. I think some of us, we will say, hey, don't invest, but we secretly go and put like a few thousand inside. Yeah, but I mean, we will test some money that we can afford to lose, you see. But I think to really maintain 100% discipline, I mean, maybe Warren Buffett does that also, but we don't know, right? So maintain 100% discipline to stick to your rules is not easy. So personally, to manage that, I set aside some portion of my portfolio to test things out. At
Has
least,
fun.
yeah, I call it the 10%, 20%, 70%. 70% is definitely all those I've tried for years. I know it's going to work. S&P 500, Berkshire Hathaway, all the stocks that I really analyze, I'm quite confident. 70% of my portfolio consists of them. 10% is really my R&D fund. Like Pete Tan Hyung tell me about certain. Okay, so I don't know. I'm not blaming him. Huh? Why I keep talking about Pete Tan? Because Pete Tan is.
Yeah, it's
I've
so
been,
strong. Oh my god.
yeah, I've been investing together with him for so many years, and he will tell me about this stock, and I say, yeah, I don't understand, I don't invest, and then you will go up by 200%. So, I've seen him perform magic so many times. I mean, of course, not every time he's correct, but he has been correct so many times until I feel like if I don't invest the next one, I'm quite stupid, you see. So I will put a bit of money to go and test it out, follow him. So far, those that he tell me and I invest, and it seems to be going quite well. So there's the Pete Tan portion of the portfolio. Okay, I mean, you're not supposed to say this kind of thing as an investment trainer or what, right? But this is the truth, lah. Okay, so that I can scratch my itch. I can scratch my itch. Like people say, well, I never invest in Luna, okay, but I mean, not making fun of anyone. But Bitcoin, all that, just test a little bit. But after that, I withdraw. Okay, I didn't invest too much into that. Yep.
And talking about Pete, right? Tomorrow I'm having lunch with him. I'm going to do this interview with him as well.
Okay.
So for those who want to get Pete's insights, when I publish my book, I will let you guys know. So make sure stay tuned. I think there's gonna be a lot of things I'll be personally learning from him as well. I think there's a very interesting question. Like some people are asking, like in the past you also provide one-to-one mentoring. Like do you still do that? Actually, what makes you want to stop coaching investing? I am, because you are such a strong investor, right? But what makes you want to pivot to doing other things?
Yeah, I tell you honestly, I think mentoring investing is very boring. Sorry. I mean, after a while, I feel like I'm a naggy mother, you know. It's just telling you the same thing. It's like, because investing is actually very straightforward. Frankly, you go and analyze, you have a portfolio, it is so straightforward. Most of the time when you do one-to-one mentoring, it's not like exploring new ideas, like coming up with new things. It's more like, hey, dude, just do it. It's just like,
it's accountability. It's
yeah,
like
it's just,
emotional and feedback and all this.
It's very naggy. After a while, I just feel like, hey, I'm just sitting there. Hey, do your push-up. Every time I say the same thing, come on, you just play a recording of me yelling at you. It's like, don't torture me. I feel being tortured. Keep repeating the same things, you know. So, and frankly, also, like, there are certain portions in time. Oh, okay. I don't know. It's like when I tell people about investing, a lot of times is like almost like having to scold them, like, hey, why don't you just do the simple things, make money kind of things, and make money? Why are you always after fanciful stuff? Frankly, it's like, hey, honestly, I mean, you also talk to me so many times already, Chloe. My answer always the same one. You might as well just go and repeat the last Facebook Live, right? Really nothing much to mention.
That's a hard part. Like, right? Just like, for example, people also know that, exercise is good, vegetables is good. It doesn't mean that people do that, right? So that's why the environment and the accountability is important.
Just get a muscular guy from the gym and scold you lah. Say the same thing can already, what? Yeah.
Okay. So all right. So let's continue the questions. I just have a few more questions to go on. I really enjoy the conversation. So, like, if you can turn back time, right? Let's say turn back to 10 years ago. What will you tell yourself to do and what not to do?
Actually, if I can really go back 10 years ago, right, I feel that I spent too much time in the stock market already. Because the less you do, the more you gain. So it's like the selling call, selling put thing. You just put your money into buying a long-term call, then you make money, and then the rest of the time, go and spend time exercising, do handstand, do calisthenics, spend time with children, spend time with parents. Stock market don't need to be so complicated one. Just read and then set and relax and let it go. So, but 10 years ago, if you tell me that, I can't understand one. You see, I cannot understand. But if let's say I can really see myself 10 years later and that guy come and tell me, hey brother, don't look at the stock market anymore. check them maybe half a year, once every half a year. Check them every time there's an annual report. That's it. A quarterly report. So every 3 months, look at it, update a bit, and then decide whether you still want to have it. Treat it professionally. Don't need to have so much emotion. I think it will make me a lot happier. But that can't be done, correct? I think investors do need to go through the phase of having all the anxiety, all the worry. I think it's inevitable. I just feel that it's inevitable. Yep.
I see. Okay. So it's like basically go back to simplicity, right? Like doing less and just sticking to what works for yourself, because everybody is different, right? I
Right.
see. Okay. So for yourself, right? Like do you have like, I believe you have already shared a lot of advice, but if you were to really stream down to maybe 1 to 2 key advice to investors, especially those who are, let's say, just started or maybe struggling right now, what's your advice for them?
Actually, very simple. You just need to survive long enough to really know what we are talking about, can already. So seriously, because I can tell you, whatever that you hear from us right now, whatever books you read and things like that, it is different when you go into the market. So that's why it helps me a lot. Why after I read Buffettology, I make money, I still want to go and look for Mary Buffett, still listen to her real life talk to me, is because when she is there to guide me into the real market, it feels a lot more. I mean, feel a lot more confident. Like really, there's a multi-millionaire, billionaire guiding me. I want to hold on to her hands and it really tell me this one correct or not, that one correct or not. So you can see, I can tell you whatever we tell you right now. It sounds very interesting. You can write notes, do mind mapping. But when you go into the stock market, all these things we tell you, suddenly the meaning becomes different. Like, I didn't know that that's what it actually meant. Okay, like maybe swimming. I can teach you swimming on PowerPoint slides. You go inside the sea. Okay, the sea. Suddenly got waves. There are things that we can't explain to you. There are things we can't. Suddenly got a jellyfish come and sting you. Suddenly your leg cramp. So many different scenarios. So I want to tell you this. Very importantly, if you want to become a good investor, really invest 1, 2, 3 years to master the skills. And in order to really master the skills, you need to survive long enough. Because if you put all your savings or all your money into this particular stock and it goes down, that's it. Game over for you. Where are you going to find more money to actually invest? So make sure you diversify into different portfolios and treat them like an experiment. Your first, okay, unfortunately speaking, your first 20, 50K, it is actually paying school fees, seriously, to the stock market. And you have to actually analyze every single trade and learn. The faster you learn and the faster you can control your emotion, the faster you become successful. But it takes time. It can't be done over like one webinar. It can't be done even over, let's say, 3 months. It can't. In my opinion, you have to really experience all the market ups and downs. You have to read all the crazy news that tell you that the company that you buy is going to close down, and even experience some of them closing down. That's where you really become a well-rounded and solid investor. So survive long enough to figure out what we are talking about, what is actually happening. Then you'll become successful.
It's always also about, like, it's not about time in the market, but time in the market, right? And in order to have this time in the market, you must make sure you diversify your portfolio, you continue to survive, and so that you can eventually benefit from these years in the market. Wow. People are asking, oh, is it normal to lose 15 to 20K? Actually, it's very normal.
That's true, but it can be avoided. It can be avoided. So if let's say you got 20K and you split into, let's say, 10 stocks, each of them 2K, the chance of you losing all 20K is very low. And of course, if you analyze and you select all of them carefully, actually, in fact, you got 20K, if you can divide them into 20 stocks, you take a random kind of a thing and anyhow pick 20 stocks in the stock market, the chance of you losing also not very high. The chance of they have done the studies before. They asked a chimpanzee, monkey, to randomly pick stocks. They form into a portfolio, let it hold for like few years. They still make money as long as you're willing to hold and you diversify. Okay.
And I think, like, it's so I believe for this Facebook user, she's probably starting, right? Like, as your portfolio grow bigger, right? Like losing 15 to 20K is actually very normal. But because your portfolio size grows bigger, right? Let's say you have a 200K portfolio or 300K portfolio, losing 10%, it's it's possible, right? Because the stock market goes down, up and down every single day. So it's really about, like, I think at the end of the day, it's like you need to bear the volatility, but you know that you are doing the right thing. You are like making the quality decision. I think that's more important. Yeah.
I want to share one perspective also. So let me ask you something. Let's say I invest. Okay, let's say we talk about 10K, correct? 10K, 20 stocks is 200,000, is it? Okay, let's say example, I have $200,000 and then I place into 20 stocks, each one 10,000. And then 2 or 3 of them, let's say 3 of them totally close down. And then that $30,000 invested into the stocks becomes zero. Is that considered a loss? What do you think? Is that considered a loss?
How many close down?
Let's say out of 20 stocks, 3 of them close down. So $30,000 gone from the market. Is that considered a loss? Okay, I want to share with you, it is how we define it. Why don't you consider it a business expense? Think of your whole portfolio like a business, okay? And you are like a venture capitalist. So your portfolio is Sean Private Limited or whatever your name is, okay? So let's say it's Mark Private Limited or Wei Jie Private Limited. So Wei Jie Private Limited has a capital of $200,000 and he allocates it into 20 stocks. So 3 of them close down, then some of them go out, some of them go down. The 3 of them take it as a business expenses. Okay, you know what I'm saying? Not? So if you are doing business and you're private limited, will there be expenses? Answer is yes. So treat some of the stocks that eventually go down as an expense. And eventually you look at it as a whole, you will still make money. Typically, you'll still make money. And some of them will be a super, like, wow, grow by 10 times. Right? Actually, based on my experience, usually your whole entire portfolio, some will close down, some will go flat. It is the 1 or 2 that shoot up a lot that pull your whole portfolio up. For those who have been investing long enough, you know that this is true. Okay?
True. And I think it also like coming back to this corporation kind of talk, right? Because like recently I'm just reading Brian Tracy's this book called No Excuses, right? And he talked about one thing I thought it was super insightful. It's about like you yourself is your own corporation. Like imagine if you are your own corporation, how like as an investor, we'll definitely want to invest in companies that continue to keep on growing, continue to pour in resources to grow the company, right? So the same thing as us as a person, right? How do we how investable are we, right, as a person? It's like we keep on pouring resources to hone our skill set, to become a better investor, to become a better person as well. So I think at the end of the day, what he's trying to say that it's really about investing ourselves, investing our own education. Just like what Sean said, right? The reason why he invested so much money in his own education to eventually able to hone that system to become a 8-figure investor he is today is because he really focused on keep on improving himself. I think that is the most, in my opinion, like that's the most important key takeaway for me as well. Oh wow, Maverick is saying that Gone Fishing with Buffett changed his investment journey, and that this book is written by Sean. You have not read it, make sure you go and read it. It's a super good book as well. I love this book. It's also the first investment book I read.
Wow.
Okay. All right, so I think it has almost coming to a 1.5 hour, right? Maybe everybody can help us type down what is your key takeaway from this session. It's almost coming to a 1.5 hour. Like crystallize what you think that it's the most useful insights that you gain from Sean's sharing, and what is the actionable step that you can start doing from now on in order to become a better investor, right? So Sean, before we wrap up, any last advice or how, for the audience, like which is close to 500 of them watching right now?
Any last advice? Okay, I think there was someone who mentioned how to start investing if I only got 3,000 to 4,000, correct? Start investing, it's just that you start with 3,000 to 4,000, but you don't stop at 3,000 to 4,000. Continue to make money, continue to invest. Investing is to let your money work for you. So before they are big enough to sustain your lifestyle, and you must understand, sustain your lifestyle means every year you only can withdraw one time, take out for the whole year's kind of expenses. So it's not like a romantic thing where you invest, few months later you can become like a full-time investor. But is it possible? Definitely it's possible. Okay, so make sure you start investing and you continue to invest and build up this portfolio. So maybe another perspective is this. If you really want to become wealthy, you got to become a professional money manager. Okay, like what Chloe mentioned. If you are Chloe Private Limited or Sean Private Limited, will you want to invest in yourself? Same thing. If you are your own money manager, will you sack yourself or give yourself a bonus? Look at the way you are managing your own money. If let's say you hire yourself to manage your own money, will you feel like slapping yourself, or will you say, hey, good job, thanks for managing my money? So manage your money, look for extra cash that you are spending unnecessarily, take them, throw it into the stock market. When I say throw it, it's like, for example, if let's say you have been watching Disney Plus, Netflix, a few things, you subscribe to a few things and you realize, hey, why do I need so many things? Maybe you sacrifice one or two of them, take the extra $16, $100, add up together. This is how much I'll save for the next 2 years. Take them, throw in the stock market. It's money that you are wasting anyway. So if you waste in the stock market, it is not a waste, right? It is investing. So become your good own money manager. Okay. One more thing. I think someone mentioned that they don't have gone fishing with Buffett. I'm not too sure whether the bookshops are still carrying them. Amazon probably still have. Okay. For those who are inside my Telegram group, let me tell you what. I'll just send the PDF into the group. Okay. Do you all want that? If you want that, you can type yes. So I'll just give you guys the book for the e-version into the Telegram group for free. Okay.
What's your Telegram link? I can type down also.
Let me just type down. Okay, this is the link.
Okay. Wealth Lab.
The Wealth Lab. Okay. Then later I'll just put it inside the Telegram group. I spent a lot of effort to write that book because I wrote that book 2 times. The first time I wrote it is really just talking about step-by-step investing. Then my brother, as in my actual brother, called Samuel, he read the book and say, wow, I cannot get past the first chapter or second chapter, very boring. Or when he said that, it's like even your own brother don't want to, don't give you face, tell you the truth, right? So I actually rewrite the whole thing into a journey form. So I actually wrote it 2 times, which I sort of enjoy because a lot of people email me, told me that they really enjoy the book. Yep.
Yeah, it's very conversational. It's like reading a storybook that you find that it's so interesting to read. Like usually investment book can be quite boring, right? But when you read Gone Fishing with Buffett, it feels like you are in the story and you become the character talking to Buffett. I think it's a very brilliant way of really making investing so simple and it inspires a lot of people to get started investing as well. And in the meantime, make sure. Yeah, you should probably make it. Who will you hire to become Warren Buffett?
Pete Tan, just kidding, I don't know.
Pete Tan. Pete is really good. Okay, so remember to join Sean's Telegram channel as well, Wealth Lab. In fact, I think this weekend, is that this weekend you also because like what Sean said, right? Investing is something that he wants to keep it simple, but at the same time, on his own free time, he wants to make sure he continues to test and learn in other ways of generating income as well. So I think this weekend is an NFT workshop, right? Is that right?
Yeah, but it's not by me. It's not by me. I invited friends who have been investing like hundreds of thousands to millions of dollars into NFT, into crypto, to come and actually give us a step-by-step workshop. And I want them to guide me to buy the first one. Because I keep wanting to go in, but I realize that, hey, if I do it myself, I just learn from friends who are already making millions, correct? So I asked them to teach me, and at the same time, I said, hey, can you just teach everybody? Now, I just want to be very, very upfront. During the weekend workshop, they do have their services that they are providing and all that. So they may do some promotion and selling, but they promise me that before that, they will really teach us step by step. Then if you need their services, you can go for them. I want to be very, very upfront on that.
I'm personally joining because I also want to learn about NFT as well. So I'm just curious. Anybody inside this webinar right now want to learn also that you have not registered? You want to learn? Can you type NFT in the chat? Just let us know. Because I believe for Sean, previously you have already closed off the free ticket, right? Right now. Yeah. So Nathaniel was saying that he can't wait for the NFT workshop as well. I believe you have already signed up. All right. So there are some people are typing in Roger NFT, Clement NFT as well. So Sean, do you want to reopen some of them?
I need to ask the lecturer also. Okay, so you'll give me some time, but if you're inside my Telegram group, if they say okay, I will put the link inside there because I already close the registration, you see. So I mean, and I'm not the one giving the lecture, so I must be respectful of them lah. So give me some time. If you're inside my group, I will go and ask them. Probably they will say okay lah, but I need to ask them first lah. Cannot be I just give it like that, right? Oh?
Okay. So make sure join Sean's Telegram channel as well. In the meantime, you can also join my Telegram channel where I also share a lot about options inside, stocks investing inside. The link is right at the scrolling banner at the below. Basically, it's Alligator Investor. So I hope everybody learned a lot today, and it's so good to see all of you are still here until like 9 o'clock. And I hope all of you took away amazing insights. Just a lot of you share about your insights. Right? Most importantly, is really start investing, all right, for those who have not started, and really start cultivate yourself with that right mindset. And right now is really the best time to get started if you have not, right? So make sure to take action. And thank you everybody, and thank you Sean as well. Can everybody help me type thank you Sean in the chat? And we look forward to attending this weekend NFT workshop as well. We will see Sean over there as well, I believe, right? You will also be doing some sharing, or you will just complete as a student as well.
I will say everybody, let's welcome the trainer. There, down there, sit there and take notes. I'm really not an expert. I'm really just exploring, and I want to learn. Because I didn't even have an experience. I can't teach, right? I only can teach theory. I want to go through the working. Yeah.
Awesome.
All right. See you guys.
Keep on learning, and see you guys next time. See you. Thank you, everybody.